the direction of the conversation is more that you're trying to guide them on is whether or not they're really prepared to be a landlord. Okay, we're recording? Okay, cool. 3, 2, 1. Hey everybody, welcome to another episode of Hello Haymarket. I'm your host, Daniel Nyce, and today we have Ali the Great Davar, and he is here to talk to us about a conversation that we often have to have with clients, right? So as real estate agents, which we both are, we believe, just like is the core message of this podcast, we believe in building wealth through real estate. And one of the biggest determiners in building wealth through real estate is the hold time. How long can you hold on to that piece of real estate? But sometimes it makes sense to sell. Obviously, we sell houses. That's part of our deal. We can't always represent buyers. Sometimes we're representing sellers. So navigating that conversation with a seller to understand when it's the right time to sell versus when it's the right time to hold. And Ali, thank you so much for joining us today.
Of course, man. I'm glad to be here.
So let's say that you are sitting down with someone, right? And they want to talk about this conversation of, hey, I'm thinking I might need to sell, but I'm also debating on keeping it as a rental.
Yeah.
What are some of the questions that you would ask to kind of find out what would be right for them?
Yeah, so I think we start by always talking about this is more of a personal financial question, right? Something they have to figure out. Because sometimes somebody coming in trying to figure out is the right time to sell, or even should I even sell now versus later. So a couple of things. One, really it's about building wealth, right? So what is your goal? Are you looking to increase your net worth, or are you looking to increase your passive income, right? I think for a lot of people, the goal is to get to a certain level of passive income because that buys more freedom. Now, when we also look at net worth, it has an effect on where the money is and what that net worth can do to create a certain amount of passive income, right? But I guess one question we start thinking about is, why are you selling? If you're going to sell, what are you going to do with the money? If somebody needs the money versus should I even sell or not, it's more of a, okay, maybe we don't need to sell. So if you were to sell, what are you planning to do with the money?
That's such a great question. So let's start there. You ask me, and I'll start giving you some different scenarios, right?
Okay.
So if you were to ask me, what are you going to do with the money, or why are you selling? Let's say that my reason is that I'm going to be a move-up buyer. I've got a starter house, like a 2-2 condo, something like that, and I want more space for a growing family. So what would you say from that?
Yeah, so let's back up a little bit. So the way you look at that, it's like life necessities, right? Life is growing, my family is growing. Sometimes it's a personal, so I know I'm not answering it, but I'm just like thinking through it. Sometimes it's a life change, a life need versus a financial move, right? If the financial move is, if I have my real estate that I live in and I'm moving to a new home and I'm thinking about, should I keep this as rental? Should I use the money to buy that house? These are all things that like you kind of help people figure out what's best for them, because our answers are different based on the age we're in, the family, like how many people are with us, the risk tolerance, right? So I don't think it's one size fit all. I think it's a good thing to have the financial education and decide what's best for you. But ask me again, what was the original question?
Yeah, so I'm sitting down with you, Ali, and I say the reason for my move is that I need more space for my family.
Yeah.
And I can't decide whether or not let's say the scenario is that I can financially support both. I don't have to sell in order to buy. In a scenario like that, what else should I think through that might impact my decision?
Sure. So you're saying you can buy the house if you don't sell this right now?
Yes.
Awesome.
I can afford to rent it out, and I'll still qualify for my move-up purchase.
So what's motivating you to think about selling?
Well, I'm just not sure if, I've never been a landlord before. It's a new experience for me, and I'm kind of afraid that I might mess it up.
Okay. And what happens if you mess it up?
Well, if I can't get anyone to rent it for enough months, I'm going to be burning a lot of money in an empty house. And I'm not sure how many months of that I can withstand before I have to lose the house.
Yeah, so I think, looking at extremes, there's definitely situations where we have bad tenants and we have vacancies. And overwhelming majority of the time, rental, properties work out seamlessly without any issues. So would it be helpful for us to kind of review the market and see what the rental values are, how fast do they rent out, and also go over some of the challenges that landlords have to see if this is actually the risk that, like, this is a type of investment you want to make, or you want to move money to a different investment.
Okay, gotcha. So it seems like the direction of the conversation is more that you're trying to guide them on is whether or not they're really prepared to be a landlord, right? Is this something that they are comfortable with as part of their life goal?
Yeah, so the way I think about it is owning real estate and dealing with tenants is not that difficult, but not everybody thinks that way, right? For some people, it's like and there's definitely nightmare tenants that might, damage the property or not pay rent. And once you fix that, you're back into having good tenants, right? And I think ratio is like, maybe 100 to 1, not sure, never looked at the data. So my risk tolerance might be higher over here saying, I can deal with that. And someone else might say, no, I don't want to deal with that. So that's more of a personal thing. But in general, I think whenever somebody's worried about vacancy is the problem of price versus what the market is. So if I price too high, I'm going to be vacant. But if all the other properties in an area are renting at a certain price for a certain amount of time, I know I can repeat that result. And if I don't, it's because the price is too high. So if I'm at or slightly below the market, I'm going to rent fast. And I'm also going to, if I'm slightly below the market, I'm going to attract the tenant very quickly. I'm going to look for a good tenant that's going to take care of the property. Most people don't realize the biggest cost to a landlord is actually vacancy. So for example, if I'm charging $2,000 a month for rent, and if I go to $2,100, I'll make $1,200. But if I stay empty for 1 month, I lose $2,000. So do you rather make $1,200 or lose $2,000? So it's sometimes better to say, hey, I will charge at market value, or go to $1,950, that's $600, but I fill it up within a week, and I'm not empty for the other 3 weeks, right? Which could be more money. So I think always look at vacancy as a cost versus a lot of landlords when I talk to, they are just looking at that $100 more and not paying attention to what they're actually losing.
Yeah, for sure. And it's a cost of doing business, right? Just like when you sign up to own real estate, you sign up to maintain it.
Yeah.
Right? It's just part of what you have to do. Now, the return at the end of the day, if you've done your math right, is definitely going to justify it. Mm-hmm. But it doesn't mean that you're not going to have to do it. You will still have to actually do the legwork of maintaining the property, just like you're going to have to factor in the vacancy.
Exactly.
Right?
Exactly.
Now, let's change the scenario a little bit. All right? Let's say instead of me being a move-up buyer because I have to, let's say I'm entertaining two choices. Mm-hmm. I have only enough money to do one of these two, right? Either I can move up, but I'll have to sell to do that, mm-hmm. right? I don't have any reason to have to do that. I'm just entertaining it as a possibility, right? Or I could make a horizontal move, mm-hmm. right, where I'm not really getting bigger, nicer. It's kind of equivalent to what I have now, but it allows me to then hold on to that other real estate one, right? So if someone's kind of debating these two, where they kind of want to try the landlord thing, but they're also entertaining just getting a nicer primary home, right? What kind of questions would you ask them?
Great question. So this is a role we play a lot as agents. You got to be a little bit of a therapist, right? Mm-hmm. So I actually deal with this a little bit of like, hey, should I buy this investment property or should I buy this boat, right? So it's like you don't have your goals clear, right? What would this bigger home do for you versus what would this investment property do for you? Because somebody that's I think thinking buying investments is actually thinking about more passive income, actually mm-hmm. saving money towards that. And the question if it's just a home versus spending the money is a little bit different. But if you're thinking about moving up to that home, what would it do for you if you did that? And what would it do if you didn't do that? And really getting clear of what kind of life effects that has on you, to realize, no, if this is the direction I want to go, or no, this is the direction I can go.
Yeah. So it has a lot more to do with getting clarity on what they really want out of their lives, right? Where do they see themselves in the next 5 to 10 years or beyond, right?
Yeah, and clarity on what the goal is, right? If I'm investing, what is the goal? It's not a random thing I should be doing in life, but I have a financial goal I'm working towards. Maybe sometimes we think the idea of investing is good, but if you're not clear on your goals, it's going to be random. It's not going to be something that you're excited about and saving towards and moving towards, or maybe even sacrificing for. So I think getting clear on what your goals are in life and in your passive income is the first step.
Yeah. Now, I think this is going to probably have the same answer, but just in case, I'm going to run it by you, okay? New scenario. Mm-hmm. Let's say they're trying to decide, this person has a goal. All right, so they have some clarity. They have a goal of being an investor, and they're trying to decide between one of two options. They could move out of the house that they have now, right? Turn it into an investment, move into a new property. And the reason that they would think about doing that is that, they get better terms on the new loan, right? Or they stay living where they are now and they absentee own an investment property from day one, which is going to require a higher down payment, but it's going to require less moving, right? What kinds of things would you bring up to help discuss those options for a client?
Yeah, I think that's somebody that already knows they want to invest. So it's more a matter of running the numbers, right? It is saving the money, maybe it's a lower down payment or actually the interest rate is worth the move, right? Going through the inconvenience of moving and having to do that, is it worth the money? Sometimes it is, right? Sometimes it's like, no, my family situation is like, I'm going to live here, I'm going to buy somewhere else, and I'm not going to move my family. My kids are going to go to the same school. We're not going to go through that entire move, and I'm just going to put a higher down payment and pay a higher interest rate as a landlord, right? Especially when people start investing in more than one property, at one point is like, oh, I'm not going to keep moving. And some people are, I'm going to keep doing that to a certain extent. I think that's a convenience versus the money that you're paying for. And at one point in your life, you're at a point where like, no, I'm going to value this convenience. This money is not worth it. But I think in the beginning, people actually are, no, I will go through the inconvenience for the money.
Yeah, that makes perfect sense to me.
As we're talking about these topics, makes me think, yesterday we were actually talking, and you mentioned you're looking for another property, right?
That's right.
Awesome. Congratulations, first of all.
Thank you.
And what makes me think is, first of all, are you planning to stay in the home you're in and buy the next one as an investment, or you're planning to move to the new one?
No, I'm in a stage of my life right now where I am trying to accelerate the acquisition of properties. I do that because, let me back up a second. Time in the market is more important than timing the market.
Yeah,
right. So
exactly.
I'm not looking at the up and downs or the seasonality. I am purely focused on, every year I'm going to acquire one. And the way I'm going to do that is I'm going to move out of whatever I'm in, and I'm going to move into the next one. And when I'm doing that, I'm turning, of course, the one I moved out of into a rental. And I'm doing that because I get the better loan terms, right? I'm able to move faster this way. And the faster I move, the more time in the market all these houses are going to have, right?
Yeah.
Because we live in Northern Virginia. This is a high appreciation market, which makes it a very forgiving market in a lot of ways. You could have something that's breaking even now, and in 5 years you're going to look golden because there's going to be rent growth. No one has a crystal ball, but realistically, right? I think we all expect there to be rent growth. We expect there to be appreciation in the sales price. I don't expect the Fed to actually reverse policy and get us into a deflationary market long term. I think they're going to keep printing money, which means appreciation is going to continue to be a thing. I want to acquire these properties, so that's what I'm focused on. Yeah,
awesome. I love the fact that you're like, hey, time on the market matters more than timing the market, because I see a lot of people that are waiting for this market to go. So market always goes through the cycles, right? We talk about that. And cycles historically have been 5 to 8 years, and recently they're more 8 to 10 years long. So if you're at the top of the market and you're waiting for it to go down, you can never time that. But let's say you wait. And somebody doesn't realize as you're waiting, someone else who keeps buying is building more wealth over time, right? And if the goal is passive income versus let me just acquire another property because I'm going to sell it down the road, like is there a number you want to hit with your net worth to just live off of? Or is there a passive income number that you want that maybe I'm going to sell this and put this money somewhere else in the stock market to get the money, or I will just might as well keep the rental properties?
Yeah, my goal is to play the infinite game. I want everything to end up in a trust that's going to support my family, but it's going to support it the way Benjamin Franklin set up his support for Philadelphia, which is it's going to grow. They can't really touch it, but you can use it as a family bank to borrow against, right? Or I guess maybe the Rockefellers might be a different example. The point here being...
So it'll be the nicest later.
Yeah, it's going to be a very nice trust that people can use to help jumpstart them, but there's going to be a lot of rules attached for it because I don't want my descendants to be ruined by this money. I want it to just give them support, right? And so that's what I mean about it being an infinite game, right? My dad bought a lot of properties when he was young, and he was trading up, and I got to live in what basically feels like a mansion to me now. Growing up, it was a very big, beautiful house in Fairfax, and now that house is sold, and where's the properties, right? So one of the lessons that he's kind of imparted on me is like, hey, hold on to them, right? Hold on to the dirt. It's going to be valuable.
Yeah, love that. Yeah, like I heard a millionaire talk about how he looks at timing the market. Meaning, I don't time the market, right? He makes over 2.4 million in passive income. Think about that, right? And he said, while everybody else is waiting to time the market, I'll just buy one more. And, I'm going to let it pay itself off. So I go on a phase one of just acquiring properties. Then I'm going to snowball them, let them pay for themselves. And now after that phase of I'm going to have a certain amount of passive income coming in, I'm going to acquire more properties forever.
That's right.
And while everybody else is waiting, that's how he built very quickly, right? Because he, I think it was in his 50s when he lost everything and rebuilt it back up. So that number of 2.4 million came in, second phase of that.
Yeah, and you have to know your market is another thing. When I speak with a lot of different investors, sometimes there is a mismatch between the expectations they have about reality and the outcomes that they're going to get if they operate on those expectations, right? So, for example, looking for a cash flowing property in an appreciation market, your expectations are a little mismatched there, right? If you can get it, wonderful, you found the unicorn, but that's not the typical scenario, right? In order to go and find those kinds of deals, you're going to have to really put in a lot more effort than I think a lot of these investors who are new to the game are expecting, right? Yeah. They're expecting a real estate agent to act like a wholesaler, and that's not really the agent's job. The agent is not a wholesaler, right? Those are different. Like the wholesaler is going to give you the deal, take their cut, and leave, whereas the agent's actually going to be carrying you through from beginning to end, coordinating the transaction. And just being a general consultant, right? I mean, I would not trust the wholesaler to tell you that the numbers are going to work and then you just take it on their word, right? You want to make sure that we actually run those numbers yourself, first of all, because the buck stops here as the investor, but also your agent has a different level of fiduciary responsibility to act in your best interests.
Yeah.
I forgot where I was going with that.
Right here.
We're just locking eyes, buddy. Just locking eyes. Yeah, I don't remember where I was starting with that.
So we're talking about the guy who had 2.4 million in passive income. This is what doing a podcast looks like, guys. Welcome to our world. And then we talked about what were you saying? I'm just kidding.
Yeah, I don't know. I think while I was talking, you were waiting for your turn, and now neither of us knew what I said.
No, I wasn't waiting for my turn. I was actually just like really listening to you, right?
Yeah. One of the things that I think people misunderstand about playing the game in an appreciation market is that they quibble over 10 grand when the asset's 600 grand or something like that, right? I mean, I cannot count the number of people who in 2020 and 2021 and the first half of 2022 were qualified for 100 grand more than what they were bidding, right? Or they had the assets in cash that they could afford to skip the appraisal process and they could pay it out of pocket. And they missed the good deal at the good rate. And 6 months later, they got a worse deal. They had to pay, appreciation had gotten out of control, and they paid like 60 grand more for the same property at double the rate. They were stepping over dollars to pick up pennies because they misunderstood the game that they were playing. They misunderstood the market that they were in. So for myself, when I'm looking to pick up a property, I don't want to grossly overpay, but I'm also not going to quibble over the pennies when I understand what I want is the right asset with the right dirt, the right location. I'm not going to pay 20 grand. I'm not going to be seduced by a 20 grand cheaper price if it's the wrong location.
Yeah.
I know where I'm at. Right? If I was in a different market, I would have to run my numbers much more conservatively because there are some markets in the United States that stay approximately flat, right? When you take inflation into account, the cash flow you get day one is going to stay that way for the next decade in some places, right? But not Northern Virginia.
Yeah. I think a lot of people, like looking at the last few years, if you're looking at an investment property, like your goal is not necessarily always getting a deal, but rather finding a home that you can buy and what passive income that creates. But when it comes to your primary resident, a lot of people think of, I don't want to overpay, therefore they're stuck on the list price versus the market value, right? So that happened a lot in the previous market, which I think we're gonna see a lot of that this year as well. We're already seeing it. We're early in 2023, and we're already seeing that, right? Now, what the Fed might do to slow down, we'll see. But people were getting stuck on like, hey, the home is worth $500,000. Why should I pay $510,000 or $550,000? Or oh my God, somebody else paid like way more. Not realizing if the market is taking the home that high, that really is the new market value. Right. What people have post-traumatic stress from is what if the market crashes? Well, if you paid market value, which there are ways to find out, we can talk about that. You only lose money when you sell in a down market. Right. Yeah. And we just see prices keep going up, and people, like you said, paid way more for the same house where they could have picked it up earlier. If they were okay playing the game and compete, they would have saved $50,000, $60,000, $100,000 when they ended up to finally pull the trigger.
Yeah. And not just that, but they would have got it at the better rate.
Exactly.
Every market has a trade-off between the rate that is going on and the level of competition that you're facing. When rates are low, competition is fierce. When rates are perceived to be high, competition decreases, right? It's just basic supply and demand. Well, it's actually just the demand side, right? The supply side is a whole other discussion that we gotta talk about. Maybe it's the supply of money is, I guess, the best way that we could discuss supply and demand as far as the rates go. I lost my train of thought.
Yeah, this was good, man.
So yeah, every market is going to have that trade-off between you're either getting a better rate or you're getting a better deal.
Yeah.
But when you're in a low interest rate market, the thing that has value is the rate.
Yeah.
Right? The thing that has value is borrowing vast sums of other people's money at a rate that will remain fixed for the next 3 decades.
Yeah.
When I buy real estate, my perceived hold time, my expected hold time is forever. I don't ever intend to sell it unless I am 1031ing that into a different asset class that's going to give me a better return. Because I think that way, I'm not quibbling over 10 grand.
Yeah.
Right? Now, I'm not going to take that to an extreme. I'm not going to pay $1 million for a $200,000 condo, right? There is a level of elasticity to the price that I'm comfortable with. Right, there's only so long that you could feed an alligator before it bites your hand off, right? So you have to take that into consideration. But if you just look at rent growths in your area over a long enough stretch of time, you can predict pretty comfortably how long it's going to take you to get from break even to really producing well. And when I'm looking at those low interest rates that we had, those people who bought in 2021 and who had to bid $50K over the starting point, which, by the way, was a totally arbitrary starting point always, right? I mean, we see sellers who pick weird, stupid numbers all the time, right, that we don't personally agree with. So the fact that it bid over is going to be way less relevant than the fact that they were able to get it years ago, now that we're looking at it retroactively, right? And they got it at a good rate.
Yeah. I think some of that might happen this year again, right? So the way I always talk to my clients about it is, the question I ask myself is, if I buy this house, let's say I'm competing with 10 people and I had to pay $100,000 over asking. The way I look at it is, if I turn around tomorrow, can I sell it for the same price without even multiple offers? If the answer is yes, I'm not overpaying, right?
Yeah.
And I think people who bought in the last few years, even if they paid way more over asking, as now we see prices have gone up, they really got a gift, because they didn't buy a house at the price they bought it at. They bought the monthly payment. They will only lose if they sell in a down market. So let's say market crashes, and what do I do with the home? If you have the ability to move and keep it as an investment, let's say I have to move out of the area. If I find a tenant before I move out, or actually while I put the other house on the contract, this doesn't count towards my debt to income ratio. So I can qualify for another home, end up keeping this home as long as it pays for itself. It doesn't really hurt me financially. It doesn't affect my cash flow, my household cash flow. And if the market goes back up, when it goes back up, I can decide to sell it.
Yeah. I often compare appreciation to offense and cash flowing the investment as defense.
Yeah,
right?
Exactly.
Because as long as you're able to break even on that and you're not losing money, then you're playing decent defense, right? But winning the game of real estate often involves picking a market where you're going to see appreciation, because that appreciation, when you finally are ready to either sell or do a refi, that is where you're able to really extract a lot of value from that property.
Exactly.
Yeah. Yeah.
Awesome.
Ali, thank you so much for joining me today.
Yeah, I loved
this
it.
was a good discussion,
Thanks
helping
for having
people
me.
kind of navigate what they're going to do with the real estate as they're acquiring it. And Ali, tell everybody how they can get in touch with you.
Yeah, so I'm on Instagram, Mr. Ali Davar. We have a podcast, Billion and Better, right? That I think we did an episode interview on, so you can find us there as well. But really, the best place for me is on social media, Mr. Ali Davar.
All right, you heard it, guys. Go send him some messages. Tell him
What's up?
Yeah, tell him what's up. Yeah, I appreciate you coming in today.
Of course, man. I appreciate you.
All right, bye, guys.
You're tired.
I know, I am. I was gonna say something like, comment on one of his. I was thinking about that photo you had with the haircut, but you don't have that photo online.